Welcome to the deep dive. Today, we're looking at something pretty paradoxical, actually. What does it really take to get the next billion users onto Web3? That decentralized internet idea.
Yeah, where users are supposed to be in control, not big companies.
Exactly, and the projections are just, well, staggering. We're talking a jump from maybe $2.7 billion this year to potentially $177 billion by 2033. That's like, what, a 44% plus growth rate every single year?
It's massive.
Yeah.
And our mission here is to unpack how Web3 is actually going to pull that off, because there are some big hurdles.
Definitely.
And what we found digging into this is honestly kind of counterintuitive. The path to this decentralized future, it might actually be paved by, well, the big centralized players. It's this very pragmatic hybrid approach, maybe not what the purists envision,
Okay, so a Trojan horse for adoption. That's a bold way to put it. Why are these Web2 giants suddenly the key? And does that maybe compromise the whole decentralization thing?
That's the core tension, isn't it? Look at companies with huge user bases already.
Yeah.
Robinhood, Telegram. Robinhood has, 26 million accounts? They're becoming these massive gateways. And they're not just dabbling. They're weaving Web3 into their platforms that people already know and use.
So it feels familiar.
Exactly. Familiarity. But yeah, it does raise questions about how much real control users get when it's through these big centralized front doors.
Can you give us specifics? Like, how does Robinhood do it?
Well, Robinhood is actually building its own layer 2 blockchain, proprietary.
Oh, interesting.
Yeah, for tokenized U.S. stocks, ETFs.
Yeah.
Initially in the EU, it offers blockchain perks like 247 trading. But that proprietary label really shows the blend, right?
Yeah.
Web3 tech, but inside their walled garden, sort of.
Okay, and Telegram.
Telegram's integrating TON, the open network. Lets users sling crypto around right inside the chat app. Remember that Snoop Dogg NFT thing? $12 million sold in like 30 minutes on Telegram.
Wow. Yeah, I remember reading about that.
It just shows the power of putting crypto where people already are, even if the interface isn't purely decentralized itself.
And it's not just the tech platforms. Traditional finance, TradFi is getting in on this too. They're tokenizing real-world assets, RWAs. But doesn't that risk just, replicating the old system on new rails, diluting the disruptive idea?
That's a really critical point. You see big names, BNY Mellon, Goldman Sachs, piloting tokenized money market funds. They're using familiar assets. Why? To lower the entry barrier for people and institutions who are maybe risk-averse.
Makes sense. De-risking it.
Exactly. It's foundational. It makes Web3 feel less out there, less scary. So maybe it seems less disruptive initially, but it's about broadening the tent, getting more people comfortable, even if that means working with some established players. It expands the reach.
Right. So, okay, this hybrid strategy helps tackle that infamous Web3 gauntlet, the barriers everyone talks about. Let's start with user experience, UX. It's often just too much. All the jargon, seed phrases, gas fees, different wallets.
Yeah, it's like the early internet days trying to use dial-up or something.
Totally. So how do you fix that complexity?
You have to abstract it away. The key phrase is invisible blockchain.
Invisible blockchain. Okay.
The complexity shouldn't be the user's problem anymore. It should be handled under the hood. Think embedded wallets, one-click social logins that create your wallet automatically, maybe AI helping manage transactions.
Then it's seamless.
That's the goal. Shift the burden from the user to the tech itself.
Okay, but what about security? That stat you found, $2.47 billion lost to exploits in just the first half of this year. That's terrifying. It makes users feel like they need to be security experts themselves.
It's a massive trust issue. And the thinking is shifting from just cleaning up after hacks to building proactive protection right into the system, like a chain-native security bedrock.
Like HTTPS for the web. Something fundamental.
Kind of, yeah. Think more like your browser warning you before you click a bad link. We're seeing AI tools emerge that analyze risks in real time, warning you before you sign a malicious transaction. Build trust by design. Make security invisible too, ideally.
Okay, UX and security. What about the core plumbing? Scalability and cost. Our sources said almost 30% of people are put off by high transaction fees. That's huge.
Absolutely. And that's why layer 2 solutions, L2s, are so critical. They're not just a nice to have. They're an economic necessity. They offer massively lower fees and throughput that's like 1,000 times higher.
Wow. Okay.
And looking even further out, you have this idea of chain abstraction, basically making the fact that there are multiple blockchains completely invisible to the end user.
So you wouldn't even know which chain you're using.
Exactly. It just works. Predictions are over half of users might be on abstracted apps by 2026.
That's a big shift. And beyond the tech, utility matters, right? People need a reason to use it.
Definitely. It can't just be speculation. We're seeing real value drive adoption. Blockchain gaming is huge, especially in Asia Pacific.
Yeah, the potential there seems enormous.
And financial services, BFSI, payments, they're already the dominant sectors in terms of market share,
Yeah.
solving real problems.
And you mentioned emerging markets, too.
Yeah, that's a key insight. Places like Nigeria, India show much higher crypto awareness. There's often a greater need for alternatives to the existing financial system there. So things like remittances, financial inclusion. web3 offers tangible solutions. The utility is obvious.
Okay, so wrapping up this deep dive, the road to 1 billion Web3 users. It's looking less like a purist's dream and more like a pragmatic compromise.
Yeah, a hybrid path. Balancing the decentralization ideals with using these centralized gateways, focusing obsessively on making it easy and safe for regular people, making the tech disappear.
Which leaves us with a pretty provocative question, doesn't it?
It does.
If Web3 goes mainstream by becoming invisible, maybe through these big platforms, does it actually empower you, the user, with true digital control?
Or could it subtly create a new kind of centralized control, just hidden behind a slicker, blockchain-powered interface?
What do you think is the most crucial thing Web3 needs to get right to actually deliver on that original promise of user ownership? Something to mull over.